All right, welcome back. I'm Austin Westfall. You're watching Live Now. Let's talk about Meta. Facebook parent company Meta Platforms defeated a U.S. attempt to unwind its acquisitions of Instagram and WhatsApp this week. This comes after a federal judge ruled that the company does not hold a social media monopoly. According to Reuters, the ruling is giving big tech its first decisive win against the antitrust crackdown that was originally started in President Trump's first term. It's also a major setback for the U.S. Federal Trade Commission, which is pursuing a separate antitrust case against Amazon. Matt Shears is standing by. He's the CEO of the Computer and Communications Industry and Association. Let's break this down for people. The government basically sought to force Meta to restructure or sell Instagram and WhatsApp in order to restore competition. They said that the company spent billions of dollars on the acquisitions in order to eliminate competitors. But the judge is saying that the companies, other companies like TikTok and YouTube, are actually evidence that there is a competitive market. What implications does this decision have for how market power is going to be defined in the digital age, Matt?
Yeah, that's a great question. And I think what this decision tells us is, as many lawyers expected, when you ask a question like, does a company have a monopoly? You look at who that company is meaningfully competing with at that point in time. And you do not do what the Biden era FTC invested a lot of energy in over the past few years here, which was contriving a very artificial market that just was essentially gerrymandered around Meta. And that didn't hold water when it got before the court. And that's actually what many observers and legal scholars had predicted.
So, and by the way, this is how the Wall Street Journal is phrasing this. The judge rejecting the FTC's claims that Meta Platforms, which is Facebook's parent company, is holding an illegal monopoly on social media. Matt, what potential risks or challenges does this ruling pose for regulators that are seeking to restrict or reverse past acquisitions by tech giants? And how might future merger review strategies need to adapt in light of this?
So my thinking is this doesn't pose so much as a risk as it does a course correction. It says that these artificially contrived market definitions, where you start with the outcome you want and then you design a market that gets you there, it says that's not going to work. What enforcers need to do is look at the data in the marketplace, study who companies meaningfully compete with. And if you're seeing evidence of competition in the marketplace, as we were seeing here, then this is not a place to bring a case. There was tons of evidence in the case that Meta was very aggressively reshaping its products in real time to keep up with aggressive competition from TikTok, competition from YouTube, to say nothing of all the other social media services out there, which the FTC was very implausibly saying, nope, none of these guys compete with Meta's Instagram or Meta's Facebook.
Will Meta's victory affect competition, privacy practices? Will it impact the power dynamics within social media platforms?
I think what we're going to see is regulators investing more energy going forward and asking questions about, do we have evidence of consumer harm? And here there was evidence that Meta was rapidly changing and improving on its products to meet with the competitors sniping at their heel. And I think that points to a bigger question, which is regulators should be asking, is all the energy that we're going to invest in this case actually going to serve consumers? If you talk to consumers today, they're worried about high price of groceries, energy, gasoline. They're not worried about the price of a free to the consumer digital service. And so there's some questions about prioritization that need to be asked here too. And I think it's an appropriate time to ask.
So, given that the ruling could set a precedent for other tech companies facing antitrust scrutiny, what do you see as the key takeaways for somebody who has a startup, somebody who's an investor, or if somebody's a policymaker, any of these key players that are watching this space? What are the key takeaways from today's decision, yesterday's decision?
That's right. Yeah. So I think this week there are a lot of startups that are likely relieved that this undue scrutiny that was coming based from that was very aggressively launched during the Biden administration was going to deter any interest in acquiring their new company. Because look, a lot of startups are ultimately, exit the marketplace and their original investors get their money back through acquisition. And so that's one off ramp that many small companies that have maybe a great idea but can't quite figure out how to monetize it, they'll look to be acquired by a larger firm. And when the FTC appears to be breathing down the neck of every leading company that's making an acquisition, the demand for those startups goes down. And so I think this will actually have a positive impact on just acquisitions in the marketplace, knowing that they're not going to be subjected to undue scrutiny, that they'll be subjected to the same kind of scrutiny that we see everywhere else throughout the economy, where the regulators are asking things like, is this transaction going to raise prices for consumers? Because at the end of the day, that's what antitrust is supposed to be about, ensuring that consumers get the lowest prices, the highest quality, and the most innovation. You don't want to have regulators in the marketplace trying to pick winners and losers.
Matt Shears is the president and CEO of Computer and Communications Industry Association. Thanks for coming on.
Yeah, thanks for having me.